Mortgage Monday segment, a scheduled segment here, and we're always joined by Carl Delmont from Freedmont Mortgage, and he's in with some great tips. A lot of people are going to be paying attention right now. Got some great mortgage ideas for those in the market, or maybe those who want to sell, or maybe want to get the most value out of their home. And as you were saying here today, Maryland is one of only 3 states discussing a ban on foreclosures and short sales from being used in comps for appraisals, and you're going to explain exactly why this is going on.
Yeah, well, what's happening when you try to refinance or sell your home and the person buys it, they're going to have to get an appraisal. The appraisers are going to try to find 3 similar homes called comps, similar in size, square footage, style, and proximity. Well, if you live in an area where maybe 10 of the homes that just sold, 8 of those were short sales or foreclosures, the appraisers are going to have to use those. That's going to drag down your value. Pretty good if you're a buyer, not great if you're a seller or trying to refinance.
So what they'll basically do, just to clarify, if they find 3 comparable homes in the general vicinity of your house, and any of those were short sales or foreclosures, which that means they were sold at a much lower discounted rate, you just lost money on your home.
Probably. You know, what will happen in today's market, appraisers are using more than 3 comps to try to find a couple if they have to go a little further away. But Maryland, Nevada, Illinois are all talking about maybe banning this practice so that people, when they're trying to refinance or sell their house, are actually getting a more fair value.
That only seems to make sense, doesn't it?
It does.
It seems sort of obvious.
Yes, it does, but no one else is doing it, so I'm kind of glad that Maryland's one at the forefront trying to do this, because I think it will help the market, because right now 1/3 of all homes sold per CoreLogic in the past year have been foreclosures or short sales. And it's a good buy sometimes to do that, but it's also affecting people negatively. So if they can do this, I think it'll be good for the market.
Seems like when you hear stories like this or hear about the possibility of this legislation being passed, it comes as a result of some really big horror stories, I'm sure, because I'm sure you've heard these types of stories.
Yeah, it's hurt a lot of people trying to refinance, especially when they go to have a second mortgage, and all of a sudden your house comes in $20,000, $30,000 less than you were thinking, because 3 or 4 of the homes that were used as comps were all short sales or foreclosures. So again, this could be a good thing, and I'm happy to finally come back and say, hey, government's coming doing something that's actually positive, not actually impacting things in a negative fashion.
Certainly,
so
we do need to see that as well. Another thing, the pitfalls that exist in homeowners insurance, because a lot of people, you've got to have it, you want to be protected, but people may not do their due diligence in getting exactly what they need.
Yeah, here's a little known thing. Let's say that you're trying to buy a house. So you go and buy the house, but you haven't sold your house yet. Perhaps the buyer of your property got delayed, maybe they're verifying something and it's taking a little longer. Per insurance policies, depending if you haven't been in that house 30 days or even 60 days, they'll turn around and deny any claims you make because it's not your primary residence. And it goes so far as even if you go away, now I don't know anyone who runs any circles, but if you go away for say 2 months on vacation, you might not be covered. And also people who maybe miss a mortgage payment or have their insurance lapse, the lenders, because to protect their interests, slap on your policy into your program a force-placed insurance coverage. It's usually 2 to 3 times the cost, and all it covers is the outside of the dwelling. It doesn't cover your contents. So what's going to happen is it's going to make your monthly payment go up if you escrow, which means that you could fall behind. So there's a lot of problems there. So if you get force-placed insurance, immediately call your insurance company and say, look, I need real insurance, and get that taken off of there. But if your house is going to be vacant for 30 or 60 days, call your insurance agent and say, do I need some coverage? They sell a policy that will protect you, but if you don't have it, you're going to be in a bad situation.
Yeah, for, of course, a little extra cash.
Yes.
Yeah.
But, I mean, insurance is one of those things is when you write the check, you hope that you're covered, and you find out that when you finally do need it, if you're not covered, you're pretty angry. So it's a good time to call your agent and ask him, am I covered on this situation?
All right, it is the Mortgage Monday segment with Carl Delmont. Once a month, he comes in, answers your questions, and gives you some great advice. Advice we'll have on our website, abc2news.com, coming up in about an hour. Megan?
All right.